Let's quickly see what happened and what transpired in the global equity markets on Friday. At the start of the show, I did flag it off that the U.S. markets, the handover was quite soft, and a big dampener was the fact that the U.s Iran tensions continue to linger on in a big way, continue to act as a spoiler as far as the market move is concerned, because at the earlier part of the sessions, we did see the key indices, the benchmark indices move up, individual stocks as well move up quite sharply, quite smartly, but it all had to come all down. The markets spared all the gains on back of the fact that the US-China, there was a big development with respect to banning 5 companies from accessing US products, and of course the US-Iran tension, like I said, which continued to act as a spoil sport as far as the market mood is concerned. If you look at the European market, even that was quite soft in trade. DAX was down 0.1%, FTSE was down 0.2%, Stock 600 was around 0.4%. Only FTSE MIB finished in the green, but it's if you look at the overall picture, it's not looking quite good at this point of time, and this also owes a great deal to the US-Iran tensions. Asian markets, let's see how they're doing this morning. It's a mixed mood right now. Shanghai is up 0.3%. Hang Seng is trading along the flat line, but with a positive bias. Kospi 0.2%. ASX is the only one which is in the red. It's down 0.3%. Nikkei also flat in trade. Oil prices have also risen a fair bit as UN-Iran tensions continue to linger on. So let's touch base with Geoff Dennis as well to get in some perspective as to how this entire situation is playing out in the western part of the world. Geoff, hi, and thank you so much for coming on board. We've seen how the markets, have reacted on back of the US-Iran tensions. US-China has been a big overhang for many, many months now. Can you help us assess the situation and how bad is it right now? Something to worry about with respect to the markets and the crude oil prices in a slightly medium to longer term?
I suspect that the US-China trade war is the more important of the two situations to worry about, because I think that's going to linger on for some time and may well get worse before you get some sort of resolution. Clearly, there is the possibility of some sort of military conflict between the U.S. and Iran, and obviously concerns over oil supplies and the Strait of Hormuz have pushed up the oil price recently. But I think at the end of the day, the U.S. and Iran will pull back from the risk of real military conflict. And so, although obviously tensions, I think, will remain high and new sanctions probably get imposed on Iran this coming week, I think long term it's still for the markets the US-China trade story that will dominate.
But the good news is that at least, on Sunday, Donald Trump said that he was not seeking war with Tehran after an Iranian military commander warned of any conflict in the Gulf region, which could spread uncontrollably and threaten the lives of US troops. And even from Iran, we are picking up some similar sort of a statement that, they want to ease the tensions. So how do you see that happen? How do you see them coming on to a mutual agreement?
I think that's a geopolitical question. I'm not sure I'm qualified to answer that. But I think the best thing to say is that President Trump has got a history already in his 2.5 years in office of actually threatening some severe action and then pulling back at the last minute. And although he's got some very hawkish members of his cabinet pushing for a more aggressive tone towards Iran, I think at the end of the day, what probably comes out of this is, as I say, more sanctions on Iran, and possibly down the road, this is a tough one to call, possibly down the road some talks between the US and Iran. But I sort of agree with the implication of your question is that how we get there, I don't know. It's not easy to say, but I think the risk of a full-scale conflict between the US and Iran is probably quite small. And I think the markets are right to price that out. In a way, they have priced it out. Markets have been stable, a little softer over recent days. I think the way in which it comes out in the short and medium term is possible further upward pressure on the price of oil.
Geoff, what will the impact be on the emerging markets of all this geopolitical tensions and also the US-China trade talks? They are likely to meet in G20, but if nothing materializes out of it, how will the EMs actually react to this news?
Well, I think what's interesting is I think if, number one, we're at peak U.s. Iran tensions, which I think we probably are. And number two, if Xi Jinping and Trump meet at the G20, we don't get any worsening of the trade war, which I think is a fair bet at the moment. I'm not sure it's going to get better, but will it get worse? I think it's debatable. Then what will happen to emerging markets will come back to more conventional things. And obviously, as you know well, in the last few days, you've seen a fairly decent move down in the dollar. And that's because of the perception the Fed's about to cut interest rates, which looks as if it will happen in July. That's pulled the dollar down and brought some flows back to EM. So I think you can assume that without any further major escalation of these two international situations, and I think that's a reasonable assumption to make, you should see emerging markets do fairly well, or unless, of course, and I've said this continuously, including on this network, unless, of course, the U.S. economy is heading for a recession, and then I think it all gets more complicated.
Okay, what about oil, Geoff? If you could offer some commentary on how the oil prices have surged, in the backdrop of how the tensions have escalated between the U.S. and Iran. Brent is already above $65 a barrel. Where do you see it settle, perhaps by the end of this year?
I suspect that this is just a political premium that's been put in there, or perhaps a risk premium that's been put in there. If you see ultimately some easing of tensions between the U.S. and Iran, and you don't see an escalation towards war, you will actually see the price of oil coming back down again. And the reason for that is because the global economy is soft. And I think the sell-off that you've seen in oil since initially, of course, in September, and then latterly since April, is probably the trend that we're heading. That's the true medium-term trend. So I think we've got more chance of oil ending up near $60 for Brent at the end of the year than $70, given that the underlying tone of the global economy is softening, and that ultimately, I think, will be the biggest driver.
Thank you for joining us this morning, giving us your view on range of issues, for example, on crude, on U.s. Iran, as well as what impact it will have on the emerging markets as well.